6, it's talk about the financing in the companies and organization, and we will inshallah explain from part 6 just chapter 14, and this is the final chapter in our course. In this chapter, we will define accounting and describe the different uses of accounting information, demonstrate the accounting process, examine the various components of an income statement in order to evaluate a firm's bottom lines, interpret the company's balance sheet to determine its current financial positions, analyze the statement of cash flow to evaluate the increases and decreases in company cash balance, and finally, we will assess a company financial position using its accounting statement and ratio analysis. تمام؟ Actually, accounting and okay. Actually, accounting will financial language organization use to record, to measure, to interpret all their financial transaction and record. Actually, it is very important tool in any organization and any business. For that, all business from small family farm to gained corporation use this language, accounting language, to make sure they use their money wisely and to plan for the future. Also, صبايا وشباب, non-business organizations like a government use this accounting recording to demonstrate to donors and the taxpayers how well they are using their fund and meeting their stated objective. So in this chapter, we will explore and explain the role of accounting in the business and it's important in making business decisions. تمام? So what is the meaning of accounting? What do you think, صبايا وشباب? Guys, what do you think the meaning of accounting? Hello, do you hear me? Guys, do you hear me?
Yeah, Sarah.
Okay. So accounting, actually, it is recording, measurement, the interruption of financial informations. Large number of people and institutions, both within and outside business, use the accounting tool. Why? To evaluate the organizational operations. So Financial Accounting Standard Board has been setting the principles and the standard of financial accounting and reporting in the private sectors. That's for or to establish and improve the standards of financial accounting and reporting for the guidance and education of public, including issuers, educators, auditors, users of financial informations. تمام؟ So who will make this records or accounting statement? Who will make this record and accounting statement? What do you think? Actually, we have people named accountants. Those have many of function of accounting are carried out of public or private accountants. Public accountant, those are individual or business can hire a certified public account, CPA, an individual who has been certified by the state in which or she practiced to provide the accounting services ranging from preparation of financial record and the filling of tax returns to complex audit of corporate financial record. تمام؟ Do you have any question?
No, thank you.
تمام. The private accountants, actually large corporations and the government agencies and other organizations may employ their own private accountants. So the private accountants, those are accountants employed by large corporations, تمام, to prepare and analyze their financial statement. Also, the private accountants can be CPA and may become certified management accountant, CMA. It's the highest level. CPA is the first level, second level it is CMA. By passing a rigorous examination by the Institute of Management Accounts. تمام؟ Do you have any question?
No, thank you.
No, thank you.
No, thank you, miss.
Okay, we have another concept related by accounting. It is bookkeeping. Sometimes the term of accounting and bookkeeping mistakenly used as the same concept as cinnamon. Actually, bookkeeping is typically limited to the routine and day-to-day recording of business transaction. So bookkeepers are responsible for obtaining and recording the information that the accountant required to analyze a firm financial positions. So we can say bookkeepers, they collect the data and save it. Then the accountant use this data, financial data, to analyze and give full information from this data. تمام? So bookkeeping, it's much narrow and far more mechanical than accounting. It requires less training than accountants responsible for obtaining and recording the information account required to analyze a firm financial positions. But accountants usually complete coursework behind their basic 4 or 5 years college degree. تمام؟ طيب who will use the accounting information or accounting record? What do you think? For whom this accounting information and report done? For whom, صبايا وشباب?
Employee?
For employee?
Yep, I think.
Like whom employee? Yes, thanks. For the owner, yes.
For owner.
Yes, and whom else? What do you think? For managers and owners, they are used those financial statements. Why? To aid in internal planning and control. So they use this financial information and report to plan for future, to control the situation in organization, and actually for external purpose such as reporting to the internal revenue services, stakeholders, the creditors, the customers, the employee, and other interested parties. تمام? Also for organization use this information and financial information, board of directors, the owner and the stakeholders, the manager, the management information system, the business research, and the internal record. The stakeholders use this information to what? What do you think? The stakeholder use of accounting information in tax collecting agencies, irregularity agencies, in a special interest group, for customer, for financial analysis, and for employee and media. The organization use the accounting information for board of director, the owner, the stakeholders, the managers, the management system, the business research, and the internal record. The internal uses or managerial accounting refer to the internal use of accounting statement by manager in planning and directing the organization activity. So, management greatest single concern in cash flow, the movement of money through the organization over daily, weekly, monthly, or yearly basis. Obviously, for any business to success, it needs to generate enough cash to pay its bill and operate itself. Also for budget, managerial accountant also help prepare an organization budget, so an internal financial plan that forecasts the expenses and the income over a set period of time. It is not usual for an organization to prepare a separate daily, weekly, monthly, and yearly budget. So a budget, it is like a financial map showing how the company expects to move from point A to point B over a specific period of the time. Also, it's used for filing income taxes, obtaining the credit, and the reporting result to stakeholders. For external, actually, regardless of focus, the principal value of budget lies in a breakdown of cash inflow and outflow. We want to talk about an annual report. The annual report is a summary of firm financial information product and growth plans for owners and potential investors. Those are external uses for the accounting statement. So managers also use this statement to report the business financial performance to outside, like government, like taxes organizations, like bankers, and other external users. تمام؟ Also, we have صبايا audit. Audit companies for audit financial statement, those are signed off by certified public accountant. It is single most important component of the annual report is the signature of certified public accounting attesting that the required financial statement are accurate reflection of underlying the financial condition of the firm. So financial statement meeting those conditions are termed audited. تمام؟ Now we will talk about the accounting process. Accounting as a primary business language, it have process must be done in the same system. So the fundamental for this process it is the accounting equation and the double entry bookkeeping system. We will talk about those two steps. Accounting equations. Accounting equation it's mean equal assets minus liability and reflect a historical value. So accountants are concerned with reporting and organizational assets, liabilities, and owner's equity. تمام? So assets, it's like what? Who can give me example on assets? يا صبايا وشباب. Guys, what do you think?
Inventory.
Asset like cash, inventory, land, thanks, and the equipment, the building, and any tangible and intangible thing. تمام? Liability on the other hand are debts the firm owes to others. تمام؟ الowner equity, its category contain all of the money that has ever been contributed to the company that never has to be paid back. So accounting equation, it's asset equal liabilities plus owner equity. Assets equal liabilities plus owner equity. تمام؟ Owner equity portion of a company balance sheet is contain all of the money that has ever been contributed the company that never has to be paid back. Money can come from investors or past profitable operations. So it's named owner equity. So to keep accounting equation in balance, each business transaction must be recorded in two separate accounts. A double entry booking actually double entry bookkeeping is a system of recording and classifying business transaction in separate account in order to maintain the balance of the accounting equation. The classification, it's all business transactions are classified as either assets, liabilities, or owner's equity. The breakdown, assets broken down into cash, inventory, and equipment. Liability broken down into bank loans, supplier credit, and other debt. Again, a double entry bookkeeping is a system of recording and classifying business transaction in separate accounts in order to maintain the balance of accounting equation. So to keep this accounting equation in balance, each business transaction must be recorded in two separate accounts. And in the final analysis, all business transactions are classified as assets, liabilities, or owner equity. And most organizations further break down those three accounts to provide more specific information about the transactions. The accounting cycle in any accounting system, financial data typically pass through 4 steps procedures, sometimes called the accounting cycle. So those accounting cycle 4 steps procedures on an accounting system. Those are examining a source document, recording the transaction in an accounting journals, posting record the transaction, and preparing a financial statement. But actually, in our day, all of these work become computerized. Step 1, it's related by examine a source document. So good managers begin the accounting cycle by gathering and examining a source document, checks, credit card, receipt, sales slip, and other related evidence concerning specific transactions. The step number 2, record the transactions. It is actually record each financial transaction in journal. So journal, it is a time-ordered list of account transaction, which is basically just a time-ordered list of account transactions. Most businesses keep a general journal in which all transactions are recorded, and some classify transactions into specialized journals for specific types of transactions account. Step 3, it is post transactions. So after they order a list of account transactions, they transfer the information from journals into ledger. So ledger, it is a book or computer file with separate sections for each account. And this process is known as posting. At the end of accounting period, and usually it is 1 year or a quarterly or monthly, تمام? They are prepare a trial balance, a summary of balance of all accounts in the general book or general ledger. تمام? The 4th step, it is prepare a financial statement. The information from the trial balance is also used to prepare the company financial statement, and in this case of public corporation and certain other organization, CPA must attest or certify that the organization follow generally accepted accounting principle in preparing a financial statement. So when these statements have been completed, the organization books are closed and accounting cycle begin anew for next accounting period. تمام? Now we will explain the financial statement in more detailed way. Do you have any questions, guys? As we said, at the end result of accounting process is a series of financial statement. We have صبايا وشباب income statement. تمام؟ income statement, it is income statement, it's financial report that shows an organization profitability over a period of time by a month, quarter, or by year. By its very design, the income statement offers one of the clearest possible picture of the company overall revenue and the cost in generated those revenue. Other names for this income statement include the profit and loss, P&L statement, or operating statement. تمام? What I mean by revenue? So revenue, it is the total amount of money received from the sales or goods or services, as well as from other business activities such as rental of property and investment. A non-business entity typically obtain revenue through donation from individual or from government and private organizations. The cash of goods sold, it is the amount of money a firm spent to buy or produce the product it sold during the period to which the income statement applies. So the cost of goods sold, it's equal the beginning inventory plus intermediate purchase, interim purchases minus the ending inventory. The gross income, it is the revenue minus the cost of goods sold required to generate the revenue. This is the equivalent terms in accounting. Revenue, that means sales or goods or services sold. The gross profit, it means the gross income or the gross earning. The operation income, it means the operating profit or the earning before interest and taxes. And go ahead. The expenses is related by the cost in the day-to-day operation of an organization. We have three common expense accounts shown in income statement. Those are selling, general, and administrative expenses, research, development, and engineering expenses, and the interest expenses. These are related by an attribute to selling goods or services and included in the cost of goods sold. The depreciation is the process of, we have another issue related by, just 1 minute. Depreciation is the number and type of expenses account vary from organization to organization. This is included in the general and administrative category is a special type of expenses known as depreciation. It is the process of separating the cost of long-lived assets such as building, equipment over the total number of accounting period in which they are expected to be used. معدل الاستهلاك أو الاهتلاك. Look for this example. The manufacturer purchased 100,000 machine expected to last about 10 years. So rather than showing an expenses $100,000 in the first year and no expenses for the item over the next 9 years, manufacturer allowed to depreciation expenses in each of the next 10 years. So better matches cost to equipment to years item is use this machine. So the fact that the equipment has a zero value on the firm balance sheet when it is fully depreciated. In net income, the total profit or losses after all expenses, including tax, have been deducted from revenue and also called a net earning. A temporary, we also have when we talked about a net income, actually most companies present the current year's result along with the previous 2 years' income statement. So we have the gross profit, the earning before interest and taxes, and the net income are the result of calculation made from the revenue and expenses account. They are not actual account. So when corporation elect to pay dividend, it decreases the cash account as well as a capital account. Balance sheet, it's another financial statement named a balance sheet. It is the second basic financial statement which present as a snapshot of organization financial position at a given moment. So the balance sheet indicates what the organization owns or control and what various sources of the fund used to pay for those assets, such as bank debt or owner equity. The balance sheet takes its name from its reliance on the accounting equation. So asset must equal liabilities plus owner equity. تمام؟ The balance sheet are often presented in two different forms. The traditional balance sheet format place the organization assets on the left side and its liability and owner equity on the right side. And more recently, we have vertical format with assets on top followed by liabilities and the owner equity. And this has gained wide acceptance in the many organizations. Current assets or assets, all asset account are listed in descending order of liquidity. That is how quickly each could be turned into cash. It's called current cash or short-term assets are those that are used to convert it into cash within course of calendar year. cash is followed by temporary investment, account receivable, and inventory in the other order, on that order. So accounts receivable refer to the money owed the company by its client or customer who have promised to pay for the product at the later date. تمام؟ Now we will explain liabilities. We have current liability. It's include the firm's financial obligation to short-term creditor, which must be repaid within 1 year, while long-term liabilities have longer repayment terms. It's called account payable. It represents amount owed to supplier for goods and services purchased with the credit. Accrued expenses, it's an account representing all unpaid financial obligation incurred by the organizations. The owner equity includes the owner's contribution to the organization along with income earned by the organization and retained to finance continued growth and development. If any organization were to sell off all its assets and pay off all of its liabilities, any remaining fund would belong to the owners. So the account listed as owner equity on the balance sheet may differ dramatically from company to company. So accounts listed as owner equity on a balance sheet, as we said, may differ. So corporations sell stock to investors who will become owners of the firm, and many corporations issue several different classes of common and preferred stock. Because it's related by a lot of rights. The statement of cash flow, it is the third primary financial statement which explains how the company's cash changes from beginning at the accounting period to the end. So cash is an asset shown on balance sheet which provide a snapshot of firm financial position at one point in the time. So many investors and other users of financial statement want more information about the cash flow into and out of the firm than is provided on the balance sheet in order to better understand the company financial health. For that, the statement of cash flow takes the cash balance from 1 year's balance sheet and compare it with the next while providing detail about how the firm used the cash. The change in the cash explained through details in 3 categories. Those are cash form used for operating activity, and the cash form used for investing activity, and the cash form used for financing activity. تمام؟ So the cash form operating activity, it's calculated by combining the change in the revenue, expense, the current assets, and the current liability account. The cash from investing activity is calculated from change in long-term or fixed assets account. The cash from financing activity is calculated from change in long-term liability account and contributed to capital account in the owner equity. تمام؟ So this is everything about this chapter. Okay. Okay, thanks for your for all to for your attend. Do you have any question? If you haven't any question, you can leave the session.
دكتورة
Yes.
No, thank you, teacher.
الحين الفاينل في شيء محدد